Hi everyone, welcome to Anu's classroom. Here we are with a new video, and in this video we are talking about budgeting and budgetary control. So this is part of unit 10 in MMPC 5. I have a few more parts for unit 10 to cover the entire unit. So this is the first among those. And in this video we'll be focusing on budgeting and budgetary control. So by the end of this video, I hope that I'll be able to instill in you the importance of financial planning, what exactly a budget is, how or what are the various classifications of budgets, how budgets are used in financial control, and what are control ratios. So let's get started. What exactly is financial planning? A financial plan will paint a comprehensive picture of where your current finances are. Okay, that is where you are at right now, your position right now. Then your financial goals, okay, that is where you want to be financially, and any strategies that you have set to achieve those goals, that is to take you from the point A where you're at to point B, that is where you want to be. Good financial planning should include details about your cash flow, savings, debt, investments, insurance, and any other elements of your financial life. Financial planning is the task of determining how a business will afford to achieve its strategic goals and objectives. Usually, a company creates a financial plan immediately after the vision and objectives have been set. And when we talk about financial planning, it is not just for your business, it is also for your individual. That is, individually also, it is very important in our lives that we have a financial plan. If you don't have a financial plan, it becomes very difficult to manage your expenses. You wouldn't know where all your money went, and by the end of the month you will be back to zero. And even after 10 or 15 years of working, when you look back, your bank account won't be that impressive. So whether it be your bank account or your net worth, it won't be that impressive. So I would say, if you are not doing financial planning, please do start it right away. Don't wait, start today. Okay, so why exactly is financial planning important? A financial plan is the most important thing, not just for a business but also for an individual. Why? Because it is a roadmap or a guideline, a reminder of what your goals are and what you're trying to achieve in the short term as well as long term. It lays out what your possible costs are and seeks out to address avenues for how to manage these costs. A good financial plan will keep you focused and on track as the company grows. When new challenges arise and when an unexpected crisis hit, a financial plan will help you come back to track. It helps you communicate clearly with staff and investors and build a modern and transparent business. So, what is a budget then? A budget is a financial document which is used to project the future income and expense. To put it simply, a budget plans future savings and spending as well as planned income and expenses. A business budget is a spending plan for your businesses based on your income and expenses. It identifies your available capital, estimates your spending, and helps you predict revenue. A budget can help you plan your business activities and can act as a yardstick for setting up financial goals. So, why exactly is a budget important? A budget helps create financial stability. By tracking expenses and following a plan, a budget will make it easier to pay the bills on time, build an emergency fund, and allocate for major investments or expenses. Overall, a budget will put a person or business on a stronger financial footing for both the day to day as well as long term operations. So, in short, you can say that a budget will help you keep your eye on the price, that is your goal. It helps ensure that you don't spend money that you don't have, helps you prepare for emergencies, helps shed light on bad spending habits as well. So, why is a budget important then? A budget will help create financial stability. By tracking expenses and following a plan, a budget will make it easier to pay your bills on time, build emergency fund, and allocate for major investments. So, what it does is it motivates in achieving our goals. It serves as a benchmark for controlling ongoing operations. It helps build a team coherence. It helps in reducing wastage and losses. And it serves as a basis for evaluating the performance of our firm or our own individual spending as well. So, what is budgetary control? Budgeting is very closely connected with control. The exercise of control in organizations with the help of budgets is what we call budgetary control. So the process of budgetary control will include at least three of these things. First is we prepare various kinds of budgets. So when you say budget, usually we link it with financial budgets. But what we must understand is that budget is not just for financial things. Budgets can be prepared for non-financial things as well. Now, continuous comparison of actual performance with budgetary performance will be done ongoing, all the while from the start of the budgeting period till the end of your budgeting period. And any revision of budgets in the light of changed circumstances will also be undertaken. Like some unforeseen circumstance came, like for example COVID-19 itself, something that was unprecedented, unaccounted for in any of the budgets that may have been created for the year 2020 to 2021 or 2019 to 2020 had hit. At that time, a good budget and good budgetary control will change ad hoc in order to accommodate for this COVID-19 things. Otherwise, what will happen is that your actual performance will be very vastly different from your budgeted performance. But that difference would be because of a totally uncontrollable thing, which and it would be for the true for everybody. So when you have such situations in at hand, which is out of your control, and if you don't adjust your budgets accordingly, what will happen is that your firm's picture, okay, will become badly hit, whereas it is not because of your what you can say, something internal issue that hit in performance has come up. So that is why we have to constantly revise budgets in the light of changed circumstances. A system of budgetary control should not become very rigid. It should be flexible enough to provide for these individual initiatives and drive. So, how can we install budgetary control? First and foremost, we have to start with organizing. That is, we prepare a budget manual giving details of the powers and duties and responsibilities and all the areas of operation of each executive in the organization. Then we give responsibilities. That is, we'll have a budget controller or a budget director who has the knowledge of the technical details of the business, and they will report directly to the president or the CEO of the organization. Then this budget controller will be assisted in his work by a budget committee, which will consist of all the various heads of the departments of the organization. Now we have to fix the budgeting period as well as the procedures of the budget. So the steps we can say in budget procedure is, first and foremost, identify and examine the key factors, make a budget forecast, choose whether you need a fixed budget or a flexible budget, and prepare the budget. So we have various types of classifications of budgets, and generally on the basis of period we can classify it as long term, short term, or current budget. On the basis of flexibility we can say it is flexible or fixed. On the basis of coverage, it could be an operating budget, a financial budget, or a master budget. Operating budget is further classified into sales, production, or cost. Financial budget can be classified into cash budget or capital expenditure budget. Now, when we talk about cost budget, which is the budget which almost always comes into our mind, okay, it could be, the budget which almost always comes into our mind is the financial budget, which is the cash budget and capital expenditure budget. But when we talk about cost budget, we can have a material budget, labor budget, any production overhead budget or administration overhead budget, selling and distribution overhead budget, or R&D cost budget. So this is a very, what you can say, small classification only of the various kinds of budgets. It will be a very good idea if you can memorize this figure, or you have another figure which is also fine in your textbook, that is also fine, but just make sure that you have this classification of budgets in the form of a figure fixed in your head, because budgets and budgetary control are a favorite topic in your term and examinations. Next is the most important point we come across in this video or in this unit. Unit 10 is the control ratios. The control ratios are crucial in the budgeting process or the financial planning process. After various budgets, including our master budget, has been prepared, we have to compare the actual performance with the budgeted performance, right? So how we compare it is by using three important ratios, which are termed as control ratios. We have the activity ratio, where we are checking the actual activity with the budgeted activity. So how do we measure activity? By time, okay? So standard time by budgeted time into 100. Then we have a capacity ratio. That also is the actual time by budgeted time. Okay, so activity ratio is what is the standard time which is required. Okay, like for example, the standard time that is required to produce one toy is, let's say, 1 hour, and you had budgeted for only for only 55 minutes, or you had budgeted for even 65 minutes. Okay, then capacity ratio is the actual time. Okay, how much time did you actually take? So standard, on an average, we say we will take 1 hour to produce one toy. That is your standard time. Okay, but actually you may have only taken 45 minutes, or on some cases you may have actually taken 70 minutes or 80 minutes. That is the actual time, but here also the budgeted time remains the same. Now, your activity ratio divided by capacity ratio will give your efficiency ratio. That is, the standard time by your actual time will give you the efficiency ratio. So that was it for this video. If you have made it so far, thank you very much. I hope that this video was helpful to you. This is not the end of our discussion on Unit 10. We have much more topics to discuss before we complete Unit 10. So I hope that you'll stick with me till the end. If you haven't yet subscribed, I strongly suggest, or I strongly urge you to subscribe if you find our content helpful, because it will help me reach a wider audience. If you have any doubts, please feel free to use our comment section. If you like the video, at least give us a thumbs up so that I know that you like the type of content I'm creating. If you did not, please show that also using the dislike button so that I can improve further. Thank you very much, and I hope to see you in the next session. Bye-bye.